now. Okay, so Katerina, you talked about your forensic accounting background, and many of the people who are in this webinar know me, but I'm Katherine Miller. I've been a matrimonial attorney in New York for 36 years. It's scary to admit that. And every once in a while, something comes on the stage that's new, and sometimes that's the law changes, and we have to kind of adapt to that and figure out, what are we going to do with this new formula? What are we going to do with this new factor? It's not that often that something new comes into the world that creates something that was nothing. And it's the weirdest kind of thing, because for me, and I don't know about how our attendees feel about this, when crypto first came on the scene, I was like, that's nothing. That's never going to amount to anything. And, clearly not an early adapter in this sense. But, it's turned out to be like a really big thing. But I think that, Katerina, a lot of people don't really understand what it is. And I have a very, I think, primitive view of what it is, but it's not all one thing. So can you explain to us what crypto is, what it's not, and what they and kind of how it works? And I know that there's Bitcoin, and then there are a lot of other things like Bitcoin, which are cryptocurrencies, and then there's NFTs, non-fungible tokens, a whole totally different thing. So why don't you just start with what cryptocurrency is, and we can move on to the other things.
Yes. So before I start with that, I know I've worked on these, like I said, for a few years. And I definitely have spent my weekends and nights just researching stuff, because as much as you think, there's always more. And there's still a computer code part of it, no matter what. So unless you're a programmer, which I am not, that part is always going to be confusing. But what is it? It's a virtual digital currency. I don't like using that word because, like you said, there's so many different cryptos out there, so they're not all really treated as currency, but it's really a computer code online that's virtual that you can use for a lot of different things. Like Bitcoin is a store of value that you use online, and it's really just that. It's the price is driven by supply and demand. So that's what makes it scary to a lot of people, but that's the short explanation of it. It's just a virtual currency. And what are they not? Well, I guess I can talk a little bit about like the background too. So people like it because it's public, it's anonymous, which is also why people don't like it. But every single transaction that's ever made with any cryptocurrency is online. It's available publicly. So if I sent you Bitcoin right now, the miners or, the people confirming it would confirm it, it'd go online, and everybody would be able to see if they knew my address or account, kind of. I can explain that too later, but they'd be able to see exactly how much I sent you. And that's, I think, what makes people feel more comfortable with it. Bitcoin was the first cryptocurrency. It became thing because of the Lehman Brothers, the subprime, the crisis in 2008. And everybody said, I don't want to trust banks anymore because financial market was crazy. So they made Bitcoin, and that's what makes cryptocurrency so good too, is there's no third party between. It's peer-to-peer. So I hope that helps a little bit.
So let me ask this question. So it's a computer code with an agreed upon value. And it's a computer code so that it's anonymous because it's a series of numbers, not anything that is identified. So it's like this. Now I'm really going to be dated here, but like a bearer bond, right? So a bearer bond, like anyone who has the bearer bond is the owner and can cash it in, and because it's got the little coupons on it, and so it really has nothing to do with tying to somebody's identity. It just has to have with having that code. Is that right?
Yeah, that's a good way to put it. I feel like there's so many different ways you could put it, but that's definitely a good example.
Yeah, because the next question I'm going to ask is explain about mining, right? I think that's a really important thing, because we think of mining for gold, mining for diamonds, mining for other precious things, and I think that's probably where this idea of mining comes from. But I mean, because from a divorce perspective, like this anonymous thing is scary, right? Because it's like a really good way to hide.
Yeah, absolutely.
That's what we're going to get into, talking about it and how to deal with that from a divorce perspective. But I think we really first need to understand what we're talking about before we can talk about how to deal with that.
Definitely. So mining. So the reason I say it's peer-to-peer is instead of, if I wanted to send you fund cash, or not cash, but through a bank, right? If I wanted to go to Bank of America and then send you funds, it would go through the bank. Whereas instead of the bank or a third party confirming it with cryptocurrency, it's somebody called a miner, who basically is somebody on their computer. It's actually not one miner that confirms it. It's many people that they see the transaction. This is where I said the computer code is always going to be a factor, but they see the transaction. It's, for lack of a better way to explain it, it's kind of like a really complex math problem that they're working to solve as quickly as possible because they want to get paid. So once they solve it and they confirm that basically it happened, because they do the math problem and they got the right answer pretty much, they then confirm it, and as long as all of the miners, people who are working on that problem, get the same answer, it's then published on the blockchain, which is what's online and where all the transactions are put. And then the miner gets paid a little bit for that too. So it's, like I said, it's always going to be one of those tricky things because the programming part.
All right, so there's cryptocurrency, and what else is there that we should be concerned about?
Well, it's really, in divorces, it's that they hide things, which is the case in any asset. That's not just cryptocurrency, but I will say a lot of the cases that I see, they just think that they're hiding it so well that people will never be able to find it. So that's really what the problem is if they never told their future ex-spouse that they were involved in cryptocurrency, if they didn't use a marital bank account, if they didn't use things that we will see, then it might be hard to find that. So that's always a little scary, but like I said, that could always be, there's plenty of assets I'm sure people do that with.
Yeah, but I mean, from a forensic accountant perspective, like that fact that there are plenty of assets that people try to hide is obviously what
you have to find it.
People like you do. So, but
Yes.
before we get to that, so we talked about the cryptocurrency. We talked about, what else is on the blockchain? Is there anything else that we should be talking about in terms of defining, like the NFTs or anything like that should be something that has value, that as divorce professionals, or frankly, anybody who has an interest in understanding what it is that people can own or not own, that is kind of new? What else should we be thinking about in terms of the what?
Okay, so you mentioned NFTs, which I will definitely get there, but that's part of I'm sure the phrase DeFi also has been heard by a lot of viewers here, which is just decentralized finance. It's really just anything that you could do in a traditional finance world, you can also do on the blockchain. So you can lend money on the blockchain, you can buy an NFT, which, like you said, that can have very high value, the NFTs. They're on the blockchain too. What else can I think about? There's a ton of different things. You can put up collateral for something. You can get insurance on the blockchain. You can, the dark web is always a big thing that you're afraid of when it comes to cryptocurrency, because you can send it to somebody in the dark web and then you get a gun, or you can get drugs, or people can get stuff like that, which is also terrifying. We can talk about all the different types. I just feel like I'm going to throw out random words right now.
Yeah, so that's exactly what Katerina, I'm really trying to do is to define that. So really, do you think you can find some words to define what the blockchain is? Again, like I think that you think about people used to dealing with things that are tangible in the real world, and the blockchain is kind of less tangible seeming, right? And so if you could explain what that is, I think that would help us then get into the rest of the conversation about what to do with these assets that are on the blockchain in a divorce setting.
Right. Well, I guess it might be a good process to talk about how people, so the blockchain is just a online ledger that shows every single transaction that's ever happened, whether it's an NFT, if it's just a cryptocurrency, no matter what it is. But when it comes to divorce, it's really, you just want to follow the flow of funds. So you want to, in order to ever buy a cryptocurrency or an NFT, you have to transfer funds from your bank account at some point. So that's kind of where we start usually. We'll see funds, that asset being transferred to something called an exchange, which is a third party similar to a bank. They're not a bank, but it's similar. Transfer your cash onto the block or the exchange. And then from that's when you can take that cryptocurrency and it will then be on the blockchain, because as soon as your cash gets swapped for a cryptocurrency, that part of the transaction will be shown on the blockchain. So I hope that explained the blockchain a little bit more. And then from that point forward, anything you do with the cryptocurrency, every transaction, that asset transaction will be online.
So I'm sorry, because there's a lot of background noise here right now, but I assure you it's not about a blockchain problem. So the blockchain is like an exchange, like a where it's an exchange, but there are others, right, where crypto assets can be traded or tracked in this anonymous way that they are.
Yes. So yeah, there are quite a few blockchains. I guess the way that I always kind of equate it to a bank account, which is not really the right way to do it, because obviously they're completely different. But it's kind of like saying if you had a bank account at Bank of America and then you had one at Citizens Bank and one at 4 others, you would have however many account numbers, right? So that could be the same thing, as you could be using 5 different blockchains, which means you could have bought Bitcoin, you could have bought Ether, which is on Ethereum blockchain. So there are a ton of blockchains out there. That really gets tricky because there are the most popular ones like Bitcoin and Ethereum, and Polygon is a big one now. But you just always have to start from the bank account and then kind of go from there. That's where it gets tricky. There's so many, but there's definitely resources online that you can use that once you start from one blockchain, you can then go to another just by once you find out one account number, which is really called an address in cryptocurrency world. Once you find one of those alphanumeric characters, you can start to trace it. And I can go through that a little more too, but I'm trying to not ramble and just answer question after question.
Yeah, so I mean, to me, my, again, very basic understanding is that as the cryptocurrencies sort of gain traction, you can be exchanged for money, right? So for like more old-fashioned currency, right? But now maybe also being exchanged for goods. Like I think you can buy a Tesla now with certain forms of cryptocurrency, and so that the exchange and so there's a flow back and forth, Katerina, between more traditional forms of currency and more tangible goods, and this cryptocurrency, this less tangible and sort of more newer form of currency. And I think you made this point that one thing that's kind of scary about it is that because it's anonymous, then people can go into the world, the dark web world of anonymity. And, I don't know about you, but I think of that as kind of an evil place, and do things that are illegal, without the ability to trace back, which really starts as a segue to, this lack of tracing. And so so first of all, let me just confirm, yes, that's right, or you would say it a little bit?
So it's anonymous to a certain extent. There are let me go back to the one thing that you mentioned about buying Tesla. So a lot of these big companies that allow quote, quote, their goods to be purchased with cryptocurrency, they actually use payment processors. So something called like BitPay is a big one. So what happens is they accept the cryptocurrency as payment. It automatically goes to this processor and they just swap it to fiat currency right away. I'm sure I mean, I don't know all of the companies off the top of my head, but I'm sure Tesla is one of them, there's no way that they could be comfortable constantly with only having cryptocurrency, right? So they use these, I mean, my company does too. We use BitPay, but that really just means that we accept it, but we're okay with the price right now. So we'll accept it and it's automatically transferred or swapped for US dollars. So that makes us feel more comfortable. And going back to the tracing of these addresses, they can be difficult to trace, but they are not always anonymous because we always typically have a starting point. So we'll get called by, let's say, usually it's the husband that's hiding it. So we'll get calls from the wife and she'll say, I saw on his desk before he left, I saw a piece of paper that had an alphanumeric character on it. And I don't know what it meant, but I think it was related to cryptocurrency because it doesn't make sense. And he mentioned it one time that he was buying it. So
before you get too deep into that, so I think what you're saying is part of the forensic approach is to look for a thread.
Yes.
Right. So why don't we, before we get too far down that, thread, like what are the other threads, like those little telltale? So he left something out. Well, so many people get caught doing something they shouldn't be doing by something they left out. What else could be a hello, you should be thinking about this or worrying about this or investigating this or hiring you to do more looking about it?
Yeah. Well, it really is. Usually you just see a long alphanumeric character somewhere, or, it's on there, a text, or sometimes you can look at their computer and you might see a random email or they'll have a Word document. If you have access to their bank statements, you can look and you'll see usually they're, flat dollar amounts that come out of the bank statement, and it'll say, let's say someone sent $10,000 to Coinbase. You can look that up and you'll see that that's an exchange online. So from there, you can't see by looking at the bank statement that what they did with the cryptocurrency, but you can at least see that they started with $10,000 being sent to Coinbase. So most likely they didn't just send down $10,000 and it's sitting there. I'm assuming they bought something, but that's where we usually start. There'll be, there can be, even if they don't have an alphanumeric character somewhere, they might have just heard them talking about it, or they have a friend that talked about it. So then they'll call us, and when we work for these attorneys, they can then go to the exchanges. So we usually go to the US based bigger exchanges and they can subpoena information from them if they have any accounts with the person's name or with an email address, or if they did see that alphanumeric.
You're going super fast. So one thing that you're saying is that even though these are relatively anonymous accounts, once the money is transferred in, that at least for the time being, while people are buying it with money that would come from an account, that you would look for a transfer out, right? And that would be by just a straight up old fashioned looking at bank statements and investment statements to see where those transfers went.
Yep.
That's one thing. And then when you talk about an alphanumeric character, I think what you're talking about is a string of characters together that have numbers and letters.
Yep, it looks like nonsense.
Right, like a good password or something like that, right?
Yes, exactly, like 0xD410, whatever it is.
And is there a specific number of characters that are in, or it's random?
It depends. And sometimes they will start with something different, like an Ethereum. address will start with 0x, whereas Bitcoin will usually start with 1 or 3. So there are some things that sometimes can tell you a little bit about the address, but yeah, it depends on the blockchain and what token they're using, really. But so yes, sorry, I know I'm going so fast, and just slow down.
I think this is really familiar to you, but for those of us who are really just kind of trying to come along and struggling to understand. And so once you have a suspicion that, so you're saying basically, so you see our 10,000 transfer to Coinbase, but then what would you, from a forensic accounting perspective, do with that versus, having actually a code that would be an indication as where something was?
Okay, so if we saw Coinbase, this is why it's great to work with lawyers. They then can, like I said, they can subpoena Coinbase, or during the process, in discovery or whatever part it's in, you can ask them for their Coinbase transactions because you then know that it exists. Those are the two ways. Other than that, we wouldn't be able to get access to it.
So you said a few minutes ago that if you had the alphanumeric code, there might be a way to do it. So what would happen with that?
So I'll give some definitions. So there are the exchanges, which is like Coinbase. Exchanges have their own address. I also keep using that word, so I'll explain that too. An address is similar to a bank account number. So it's a random string of letters and numbers that you as the holder, you own whatever's in that address. So exchanges get a little difficult because the exchange, have their own address. So it's anybody who puts funds into that exchange, you won't really know whose funds it is because the exchange has one address. So it's like if we were looking at all of a bank's transactions for all of their, their clients, and there was no bank accounts at all on it, it was just the full bank's transactions, you wouldn't know whose funds is whose. And sometimes they even take our funds and go and loan it out. So you don't really know what's going on. So going back to what you were saying, if we have that address, there's two things we could do. We can see if it's an exchange. If it's an exchange, then we need to either subpoena them or ask the opposing side for their transactions. If it's not an exchange, then it's on something called a wallet. So a wallet can be 3 different types of things. It can be a paper wallet, which is, you still have to do something with it, but it's actually a piece of paper you just write down your code on. So clearly you can't really do anything with that because cryptocurrency is online. Or you can do a software wallet, which is similar to an exchange, but that address is actually yours. So if we get that address, we then can go onto the blockchain and search that address and see all of the transactions that that person, what they were doing with it. So usually if somebody has an exchange, they won't write down an address, that long alphanumeric character, because it's not theirs. They don't even know what theirs is. So if you see that, you'll typically know, okay, I can go to the blockchain and start to see all the transactions. Does that make sense? Kind of.
Yeah, I mean, I think that the identifying information is the alphanumeric code rather than my name, rank and serial number, right? Like that, and so that the person who has the code basically has access to the asset. Is that right?
There's security on it. Yeah, there's security on it. So you have to have, it's what's called a wallet seed, which is a bunch of words that are put together that are then put into code that make that address. So you have to have a few other things that's kind of like a password in order to get into it. So even if you lose that, you'll never be able to get into your wallet anymore. So, or if somebody finds it, then you don't have access to your funds. So no, I mean, we can, seeing these addresses on the blockchain, I wouldn't be able to do anything with it, but I can say, okay, your address is X2458. I then can go see every transaction that you did because you wrote it down on a piece of paper on your desk.
All right, so one of our listeners asked, when you mention the alphanumeric code, are you talking about the code for a wallet?
It's either a wallet or an exchange. Yes. I'll send here. Let me look up one and I'll just send it in the chat so you guys can see an example.
So, I mean, because the wallet is a place to hold, right? Where you're holding the codes. I mean, in a way, right? Like it's, and that's why it's called a wallet, because you're putting your currency in your wallet. And so it's obviously not a wallet like we would put bills in, but it's a place where we're holding it, and it could be tangible, like you write it down on a piece of paper, in which case you should hope not to lose that piece of paper, right?
Yes.
Or you could find it in an digitally, where store these places like in a I don't know, like in a secure location, and that there might be ways to get into it. So you put into the chat, tell us what we're looking at.
So that is an Ethereum address. So if you look up that address on, I can share my screen too if it's easier to see what I'm talking about on the blockchain. Is that easier?
Sure.
Whatever you like. I'm a visual person, so personally would help me.
Yeah, because this person says it's her understanding that the wallet has its own code, and so she'd like to really understand the difference between the code that's the code for the currency and the code that's the code for the wallet, and how they work together.
Okay, all right, let me see. Share my screen. You see my screen?
Yep.
Okay, so this address is one that I just sent to you because it's the first one that popped up. And this is the blockchain for Ethereum, and it tells you the address of whoever it is, the balance as of right now, all of the currencies that they own, and then down here, this is where it'll give you every single transaction. So this hash is what they basically call a transaction code or ID. And then the method sometimes will tell you what was going on. So usually if it says transfer, it can be a transfer between someone's two wallets. And then it'll give you the time, and then who it was from and where it went to. So in this case, do you want me to slow down?
Oh, you're doing great, I think.
Okay. So then if you go, you can click any of these here and you can look at the transaction that happened. So this one, you can see that, you know what, this is a more difficult one. Okay. So this one, here's the transaction. So here's the number or the ID that's telling you what transaction it is. And then the date, who it came from. So this is the person's account that we were looking at, where it went to. Can I tell you who this is? No, but maybe we saw it in their email, or, maybe we have some kind of information that we got elsewhere that tells us who that is. And then here it'll tell you exactly how much was sent between those accounts. So when you're buying this cryptocurrency, it's really on an exchange. So there isn't, depending on the currency, there isn't really a address for it. Ether is really just, it is what it is. There's no address for that, but your wallet will have its own address.
So there's a code for the currencies, but they don't have an address, but the wallet itself has an address, and but there might be some encrypting, like encoding, like as a security method to get into the wallet in the event, so that not everybody who stumbles upon it can just go like, oh, I'll have that.
Yes,
exactly. The currency.
All right. Also, I don't want anybody to think if they know that I'm kind of wrong by saying that phrase. Some of the cryptocurrencies do have, like you'll see right here, this is USD coin. that is its address. If you click on the name, this one is a token contract. So if you were to buy USDC, that one does have an address, because that's another rabbit hole we can definitely go down if you want to, but it's a different type of cryptocurrency. So it's actually a smart contract. So it does have a alphanumeric address.
So we have a question, but then we can talk about what a smart contract is and how it differs from, because I think this question is really more about a currency as opposed to a smart contract. So the question is, what is the value or exchange rate per currency? And is it similar, and I guess in terms of our thinking about it, to like dollars against euros or something like that?
Yeah, you can think of it like that. That's exactly how it is. So if you wanted to exchange dollars and euros, they just figure out the exchange rate and that's it. So it's the same thing with when you're trading a crypto for a crypto, they'll do the exact same thing, just using different resources.
All right. And another person asked, if you know that somebody is trading directly on or through the exchange and not through a wallet, I mean, is that something that they can do? First of all, yes.
Yes.
So then how do you start the search, and what's the identifying information that you'd need?
So that's where the Coinbase scenario came into play. If you looked at someone's bank account and you saw that the funds went out to Coinbase, then the only way you'd be able to see the transactions that actually happened related to that client or whoever it is you'd have to subpoena the information from Coinbase or get it through discovery.
So you're looking for that thread we were talking about before, right? And then looking to research the thread, because one of the things that you said earlier, and that I think is well known about the crypto world, is the anonymity. So if you're doing your research, you're going to subpoena. What are you going to subpoena if it's all anonymous?
So it is anonymous to a certain extent. So I'll give an example. There is a company called, I'm blanking on the name right now. There's a company that basically works with law enforcement, and they'll even go onto the dark web and they'll buy things themselves just for strictly their own purposes so that they can get a whole list of the addresses that are being used. And if they're working with law enforcement, they sometimes just have more information too, because they do. So there are companies and there are some websites out there that if you look up an address, it will tell you who owns it. Or the blockchain, the Ethereum blockchain Bitcoin blockchain really doesn't give much information at all. It just gives that long address. So unless you are working with somebody who knows who owns it, it's very difficult to figure that out. But Ethereum and some other blockchains, if they know who the owner is, then it'll say it on the blockchain. So that helps.
So are there statements that people who own currency get about how much they have, or is there some other way? If we're asking them to share the information, as we do, right? We say, okay, I own Bitcoin or I own some other currency. How is anybody supposed to know what that's worth?
How much they have as a balance?
Yeah, and how could they verify it? Could they produce a document that says, here's my wallet? Even if they're being completely honest, it's hard to prove a negative. So how do they prove what they've got and what it's worth?
Well, that's where the blockchain comes in handy, because they can't, if you know their address, they gave us their wallet information, we would know that that's their address. And then you can go online and you could see everything that was happening. And we've had that happen before, where we go through all their transactions and then we question them on it. Because if they're sending out, 100 Ethereum somewhere, that's a lot of money. So we ask them where it went. Because if they were transferring it to another one of their own accounts, you want to follow that. That's really, it is a thread. You have to start somewhere. And then from there, it's really just following it and knowing if you have the complete picture. That's just looking at the transactions and tracing the assets to make sure you get to an endpoint.
Yeah.
Pretty much.
Another one of our attendees asked a really good question. How does this work in estate? Well, in probate, she says estate planning, but really, if my husband dies, how would this money pass to her as the wife if she doesn't have the alphanumeric code? And she says she hears that his Coinbase account can only be accessed by facial recognition. Will the money be lost forever? And that is a really, really good question in terms of not just divorce, but what if we need to know something and we can no longer use facial recognition or get access to the information?
Right. So that depends on where it's being held, really. If it's a US based exchange, you can, I'm sure, talk to an actual person and figure that out because we've subpoenaed them before. So I know they at least respond to legal proceedings. So I would contact them. If it's a foreign based exchange, that gets very tricky because you can't subpoena them, you can't ask for information. Very unlikely that you'll get anything. If it's a wallet, then that wallet seed that I was talking about before, that password, you want to make sure you know that and it's somewhere. If you lose that, then it is true, the funds will be gone. So with estate planning, a lot of people, they'll put, some people actually, so the wallet seed, which ends up being, like I said, your password, it's called a private key or a public key. In order to make that key, you have to have a certain number of words that are then put through an algorithm and all the computer code stuff. But some people take those words, say there's 10, and they'll give 5 to their son and 2 to their daughter, and the rest of them are in a safety deposit box. So you have to call all 4 of them in order to get the password. So some people do that with estate planning too, to make sure that not everybody will have access to their funds. But if you contact these 2 people that they trust and then go to a safety deposit box and get the whole thing, you'll have the funds. So that's a very good question, and it really depends on the person, but something you have to think about definitely when you're doing your planning.
Yeah. So it sounds like what you're saying is it's kind of like the safe deposit box where you need a bunch of different pieces in order to be able to put the pieces of the puzzle together from an estate planning perspective, so that then the funds can be transferred or released to the new owner. But if you don't have that, it's a real problem, right? I mean, it's like, Swiss bank accounts that don't always make the transfer because they're secret. And
Right.
that's the kind of the other edge of the sword of the secretness of the account. So making sure that, and what would your recommendation, Katerina, be for people who want to make sure that these assets do transfer in their estate, to making sure that they're also secure but they're also, carried on in the family?
Yeah, I mean, I would still want I probably, if it was me, I'm not saying this is the right thing, but I would write it down and put it in a safety deposit box or maybe a safe in my house, just to make sure that nobody can get to it. It won't burn if the house burns down. Make sure it's not in a computer anywhere because hackers can come and find it. So I would write it down on a piece of paper, your password, or maybe 3 different pieces of paper and put them 3 different places. And in your will or whatever it is you're planning, you can write little tricks or whatever it is, like a little note to your spouse to tell them where it is, just in case.
So I'm sorry that Tom isn't on this call because we have another question about the law that's applicable for divorce situations. And I don't know if I could certainly talk a little bit about this, but whether or not when you have a divorce situation, is it this industry specific law that's applicable, or is it the law of the marriage that where the people are? Are there federal laws that deal with this?
Yeah, it's state by state, actually. It's similar to like a Western Union. That's how we explain it. Every state's different. So that's where you'd have to look.
And that's true about divorce law too, obviously, that each state has its own laws and the way that the assets are divided up would be divided up like any other asset
Mhm.
according to the laws of the state in which the people are getting divorced, which may be where they got married and it may not be where they got married. So,
Right.
so Katerina, I know we're covering so much material really fast, and I just want to say that I think that your contact information will be with the webinar recording and that it has been sent out with the webinar registration. So everybody should have it. And if they've got specific questions, they can reach out to you. And I just also want to ask you, though, you talked a little bit about smart contracts. And so talk about what that is and how that relates to what everything else we're talking about here.
That's really, smart contracts are where, so let me back it up. Not every cryptocurrency uses smart contracts. Bitcoin does not. Bitcoin is just a store of value. You trade your fiat currency for Bitcoin and that's it. That's all it does. Ethereum or NFTs, they are different. They're run on something called smart contracts, which is what makes them so great, but also not so much sometimes. So it's for people who are good at Excel. I think of it kind of like an if-then, like an if statement. If you write a contract and it automatically is put into whatever you're putting it into, and it'll do in the future something else that you need it to do. So with there's, I'm trying to think of a good example. There's some places online that are called an aggregator. They are a good example, I think. Basically, it's saying if you want to swap this token for this token, we will do that if it hits a certain price. If you go into your exchange and you do that, or it's just really, it's just code that does something very specific for you and nobody can mess with it. Long story short.
So I think what you're saying is that a smart contract is like a series of actions that happen automatically once the trigger happens, right? And so instead of it being that, it's kind of a one-off transaction, it's a whole series of things that could happen, which I think is very interesting from the purposes of handling the division of future assets and divorce. That's a whole nother webinar we can do though. Yes. So, but we have somebody else who, and that what you're saying is that some of the organizations that run these currencies work with that kind of sequence of events and some don't.
Yeah, I mean, I'd say most currencies now do. After Ethereum was made in 2014, I think, or 13. Ever since then, people just really want that because they want to be able to do all their things with it. But it's just, if you go on any website, it's similar too. They still, smart contracts aren't a new thing. It's just goes with cryptocurrency, so people hear about it more. But if you go on any website and if you Google something and then you click the link, that's initiating a smart contract. So it's just going on behind the scenes and you don't see it happening, but that's pretty much what cryptocurrency is. It's doing everything online for you in the background because you told it to and the contract's listening to you.
Yeah, that's really helpful, I think. So another attendee says, what are the tax consequences of one spouse giving crypto to another when splitting the assets pursuant to a divorce? Is it any different? So that's normally a tax-free transfer if it's an equitable distribution or a distribution of assets pursuant to a divorce under the Internal Revenue Code. Is crypto any different than that?
It is not. Nope.
What about though, but while we're talking about taxes, and this is, not really relevant to divorce alone, but how do people handle capital gains?
That is a very, very big question right now. That's something that is very difficult, but there's a few different ways that you actually can handle or tax cryptocurrency. Sometimes there's even ordinary income on it. These miners, right, that are confirming all these transactions, they get paid in cryptocurrency. So that's reported as income. Capital gains and losses, that only occurs when let's say you swap Ethereum at one point, right? Or you buy it and it's at $10, which Ethereum is not at $10. Let's say it was. And then later on you swapped it for Bitcoin, or not, it wouldn't be Bitcoin probably, but you swapped it for something else and it was at $5 when it went out. That swap will be recorded as a $5 loss on your tax return. So it gets very tricky because a lot of people have so many transactions, because it's not like a typical stock market where you might do, I mean, I'm sure people still do thousands of transactions, but with cryptocurrency, it's so quick. There's really never long-term capital gains or losses. So it gets tricky.
No, but so I make an exchange in my investment account and Pershing says, reports at the end of the year to the IRS, or Chase says, Catherine had this kind of interest on her account, or so, there's a kind of, and so when the IRS says they have a way of checking, kind of on the back end, I'm reporting that this is what my income was, but they're checking with my employer, they're checking with everyone that gives me interest and dividends, and the capital gains, and so they have a way to close the loop. If this is anonymous in the way that we've been talking about, is there a way for the government to close the loop on these exchanges?
Definitely. So they actually use a program called Chainalysis, which is just just a program that basically looks at all the transactions on the blockchain constantly. And it's similar to, like I said before, when you look on the blockchain and there's, the owner, that owner would be then listed in their system. So they also can subpoena easily any of the exchanges, because they actually did that in 2000, I don't remember what year it was, but they subpoenaed Coinbase for all of their clients that had over $20,000, I think, as a balance in their exchange, to basically prove that they were either reporting that or not. A lot of these exchanges do actually give out interest statements too, if they're doing it how they should be. Coinbase does. So that's good. But we are hired all the time to actually calculate the gains and losses for clients, because it gets to be a lot. You have to look at the blockchain. That tells you a lot of information. I might even tell you if it's interest. But other than looking at the blockchain, that's what you have to go off of.
But it sounds like, Katerina, that the same way that the government could get this information, lawyers in a divorce case could get the information in a very similar way, by just doing a little bit of digging and hiring someone like you. And I don't mean this to be an endorsement of hiring you, but I certainly wouldn't have a clue where to look for some of these things. So some of the things might be just reflected on the tax return. You could say, what's this, what's the other thing? But assuming that somebody who is really trying to hide it isn't also going to be maybe reporting it on their tax return either.
Yeah, that's why the IRS subpoenaed Coinbase, because they knew people weren't. And without starting somewhere, their starting point was the exchange. You can't really prove it unless you have that string that you're looking for.
So, we have about 5 minutes left, and I know that I can see that in the list of people who are attending the webinar, there are a number of my colleagues, and I know that they're wondering, all right, so I've got cases and I'm thinking maybe there's cryptocurrency. What do I do to do my due diligence of looking for that, finding it, and making sure that we're talking about it in the event I think that my client's spouse might have something or might not be revealing everything that they have? Or is there something we should just be doing on a general level all the time just to check if this is an issue?
Yeah. Well, there's a few places you can look. I know I only really mentioned the bank statements before, but you can look at a bank statement. You can look at the tax return, like you just said. It can be income, it can be capital gain or loss. You can look at a net worth statement. Theoretically, someone should be putting it there. Are they? I don't know. But you can look there. Some people get loans, so you can also put up collateral on the blockchain, which is usually about 200% in the crypto world, and then they'll send you fiat currency. So you can look at the bank statements not only for funds going out for purchasing, some people borrow using cryptocurrency. So you can look for that too. The depositions, you can always ask. Other than that, there's places you can look, but without having, looking, it depends on what you get, really. If you have their emails, you can look through their emails, their computer, their phone, their messages. But a lot of that, obviously, you have to get permission, or through the process, you get that. So the starting point is asking. And go ahead.
So what would be different if there is a difference if you suspect an offshore account? Is this similar to having you suspect a Cayman Islands account? Because a lot of what you're saying is exactly the same thing that I would think to do if I suspected an offshore account. Am I missing something?
No, a lot of it's very similar to that. You see that the funds went somewhere, so you ask. Instead of a bank account potentially being on the bank statement in this case, it would be an exchange name, but it does pop up because at some point there had to be cash involved to get cryptocurrency. They don't just let you have it.
Yeah. So what is your advice to the lawyers on the call? Like, what should we be learning about, thinking about, learning, kind of educating ourselves about crypto more than just the 55 minutes we've spent together so far today, Katerina?
Well, I think it's good to understand the blockchain in general, just to go on it and kind of look around, because it does make sense. You just have to learn it and teach yourself and have the patience to, which is not always easy. Also, just big exchange names, that's good to know too. Coinbase, Gemini, there's a lot of US based exchanges that it's good to know when you're maybe just glancing through documents that you got. Other than that, and also asking, has your, I'm going to say husband, just because like I said, usually it is the husband and the ones I've worked on. Has your husband mentioned buying it ever? Have you heard any of these? Some of the most common cryptocurrencies are probably good to know too, because you can give your client a list of currencies, and sometimes they didn't even know that it was the name of a currency, but all of a sudden they see Bored Ape on a list and they're like, oh, he did mention that to me one time. That does make sense. So okay, he was involved in it. So then maybe you subpoena those big exchanges, or from there, it's just kind of getting that light bulb going. That's where you have to start, unfortunately.
So actually, I think you're talking about an interview with one's own client, right? Because my next question was going to be for the people who aren't lawyers on the call, who are just here because they're curious about what to do about a spouse who might have cryptocurrency, and what should they do? And so one thing is to search their memory, look around, check the desk. I mean, that might sound picky and snoopy, but
no,
hey.
Yeah. It is. Sometimes some of these clients will call some of our attorneys and they'll say, are they still in the marital house? If they are, go look around, go in their office, or if their office door is locked, ask them why, because there might be a reason. So yes, if you're not a lawyer, it's still the same concept. It's interviewing. If you are an attorney, then I would say during the discovery process, ask for all addresses if they have any, or if they were involved in cryptocurrency at all. If they were, what exchanges are they using? Give us your address, just all that information. Or you can always hire a computer forensic expert. They can come in and, when you delete an email or a file, it's never deleted, even if you delete it from your recycle bin. So they can help with that. That's where I would say to start.
All right, that's super useful. All right, last opportunity, everybody, if you have a question for Katerina about this. Otherwise, I'm going to wrap this up. And really, thank you so much, Katerina Gaebel.
You're welcome.
Today. That's been really helpful. Helped me answer a lot of questions about crypto that I have, and some concerns about how to best represent my clients. So
good. I'm glad. I know I went very quick. It's hard to put all of it in and have it make sense during an hour. So if anybody has questions, please
But
reach out to me.
everybody will get a copy of the webinar today so that they can slow it down and listen over again. But I do appreciate your offering, answering questions that people might have.
Yeah, I think today's session could have, or webinar could have gone into like 6 different webinars, starting from the beginning to the end. But hopefully it helped a little.
All right. Thank you so much. Thank you, everybody.
Yes, you're welcome. Thank you.
Bye.